And now, Lifestyles Unlimited presents the Real Estate Investor Radio Show. Over the next hour, we unfold your map to financial freedom. You'll learn how to retire through investing in single-family and multifamily real estate. You'll learn how to create cash flow and build wealth so you can have the time and money to live the lifestyle you want.
Hello and welcome to the show. This is Andy Webb with Lifestyles Unlimited. And as always, we're working on your financial freedom. And I thank you for tuning in today. I've got a great show for you today. I've got a great guest on deck with me. He is an award-winning multifamily investor from San Antonio, Texas. So you're going to want to stick around, catch the whole show. Oh, and by the way, this award-winning investor, he is now on the multifamily mentor team in our Central Texas market. So you can bet he has some good insight. So without further ado, Geoff, I want to welcome you to the program. Thanks for joining me today.
Thanks for having me, Andy. It's always good to be on with you guys. I enjoy giving back through the radio show. It's always kind of fun.
Very good. Well, hey, I know your story. I've got your resume here in front of me, your bio. I know you've been on the program before, but for the listener that's just catching the show for the first time, I want to set the table for them. Let's go back a little bit. Before you started investing in real estate, what were you doing? Did you have any experience in real estate? And how did you find Lifestyles? What brought you to us?
So prior to investing in real estate, my wife and I, my wife's Carla, our soiree into real estate was we worked in construction. Carla worked for a company that supplied plumbing appliances, lighting, hardware, cat hardware, things like that to high-end custom home builders. And I worked in construction basically since I was old enough to have a job. I've worked everything from heavy equipment construction. I've done plumbing. I've done framing. I've done roofing. I've done just about everything except for electrical and HVAC. And then the last thing I was doing before we started investing in real estate was I was working on the sales side, selling as a manufacturer's rep, selling materials to builders and actually multifamily developers too.
Okay, so that background points towards what you're doing now as an investor. Did you invest prior to becoming a member at Lifestyles Unlimited?
We did not. We didn't invest in real estate. We were 401k, IRA, mutual fund. We were Dave Ramsey people. We had a pile of debt when we got married. We doubled down, paid it off, and then once all of that was paid off except for the house, we kind of looked around and went, what now? There's got to be something better than sitting here waiting for mutual funds to grow over time. So
yeah, eating rice and beans. Yeah, let me point the listener to last week's show. I talked about this very topic: debt versus no debt. Go to lifestylesunlimited.com because you can catch that there. It's a classic argument, isn't it? Which direction do I go? Debt is good, debt is bad.
Consumer debt is what we were paying off, right? It wasn't the quote good debt. It wasn't mortgages and things like that. We were paying off stuff we racked up during college and when we were young and having fun. So,
Yep. Hey, and that's the proper way to go. Now, Lifestyles Unlimited. How did you hear about the organization? What prompted you to join? What was the motivation there?
Well, we were working out at a gym, and a friend of ours at the gym started posting a bunch of stuff on Facebook about just renovated this house, just bought this house, renovated this house, and there's a guy named Christopher Carr. He's a lender now, but at the time, I think he bought 30 houses in 3 years or something like that. And he was just blowing and going. And I finally, had enough of watching him do it and picked up the phone and called him. And I said, "What are you doing?" And funny thing was, he started talking in real estate lingo, ARV and hard money and LTV and all this other stuff. And I said, I have no idea what all of that stuff means. So I tell you what, there's a case study coming up in a week. Be my guest, show up, sit down, listen, learn. You'll understand all of this. And back then we went to case study and then we had to wait, a week or two until the 2-day class came up on the weekend. But now it's, that same, you come in on a Thursday, you come right back on a Saturday and get the education. And it's pretty amazing how quickly you can change your mindset, just in a matter of a couple of days.
Yeah, and suddenly that ARV, those acronyms, they're not so mysterious. Starts to make a little more sense. When was that? What year was that?
That was in 2015.
Okay, 2015. Now here we are. 9 years later. You and your wife, are you real estate retired?
We are, yeah. I was able to walk away from my my full-time corporate sales job in 2020, the latter part of 2020, and my wife actually joined us in our business just this past September. So it's been a fun ride. We went out and bought 4 houses in 90 days, so we were not
Okay.
playing around.
Yeah, that's good.
And each one of those, at the time we were able to get pretty good cash flow. Each one of those was, between $400 and $600 a month in cash flow. So all of a sudden we had a pretty good additional stream of income coming in, and some capital gains on top of that as the years progress.
Yeah, and that's the important thing, I think, for the listener as well. For a lot of people out there right now, what inflation read just came in and it was higher than anticipated. Yes, inflation is still there, and a lot of people are struggling with that. And this is really a good way houses are to create that additional income. Now, with interest rates where they are, that 400 to 600, that's compressed a little bit, although I still see those numbers in some markets. So it is a good way to create that breathing room, that additional revenue. Now, I know you're a multifamily mentor now, but is there anything you would tell the listener to know to help them understand the single family market?
Well, I think you tie in with a realtor. I mean, for us, we've got our realty team and Lifestyles. You tie in with a realtor, and if you're a member of Lifestyles, you tie in with the mentors. And really, your first couple, you kind of lean on them a lot. And hey, is this buying in the right area? I think you just got to do your due diligence and make sure you know what you're buying, go into it eyes wide open. The 2-day teaches you. I mean, you can walk out of the first day of the 2-day and have all the tools at your disposal to be able to go out and be successful buying single family houses. The mentors and the realty team just make it that much easier.
Yeah.
And allow you to go a little faster. But I would just say, make sure you do your due diligence and make sure you go into it eyes wide open and know what you're buying.
Yeah, very good. Now, have you divested all those houses in order to move into multifamily at this point?
We did. I still manage 2 for my mom, but as far as the ones that we owned, we have sold. Last year was the last 2 that we had to liquidate, and those were the first 2 big rehab projects that we bought. So we held on to those for 6 years.
Okay. And I'm curious, was the transition for you into multifamily from single family easy, hard? How would you describe that?
It was pretty easy because initially we moved into multifamily as passive investors, and we got into a few passive deals, relatively quickly. And then when we went and decided we wanted to become leads, we went to, so we have acquisition road trips where the realtors will get up and they'll, present a property that says, hey, here's all the nutrition facts on it. My wife sent me to this to learn. She says, go learn, don't buy anything. Well, I called her after the meeting. I said, I think we've got one we need to go buy.
Really?
And so, I mean, for me, it was actually pretty easy. We, sometimes, leads will underwrite deals for a year before they find the right one. And just so happened that this one was a market that I knew, that I, spent a lot of time in growing up, and it just fit. So
very good.
The multifamily stuff transitioning over was pretty easy.
Now, just for the listener's sake, you used a couple of terms there. I want to make sure they're clear on you. You started by investing as a passive, and now you are a lead. Define what a passive is versus a lead.
So passive investor and outside of Lifestyles, it's a limited partner. You meet people that put the deals together. The leads are the people that put the deals together. They go out, they do all the heavy lifting, they make the relationship with the broker, they find the deal, they underwrite it, and they put the deal together, the investment together. The passive, it's your job to hold the lead accountable. You read through the documents, you look at the financials, you make sure it fits your investment strategy, your investment goals, and if it does, then and the lead and you feel comfortable with them, then you basically write a check, and then you get to sit on the couch watching Netflix, eating Cheetos, and collect money quarterly as these deals pay out.
Yeah, I'm in that camp right now, Geoff. We still have a lot of single family, so getting around to selling, refinancing, et cetera. But we made that move into passive. We're not lead. We're not IRO yet. Maybe that's on the horizon. But I'm curious. So you leveraged the mentors, the single family team when you started buying houses. How did the team help you then when you made that shift into apartments? Well,
I mean, you've got the same group of people. You've got realtors that Lifestyles Realty has a multifamily division, and then you've got your multifamily mentors and your operations consultants at the multifamily level. It's a very similar situation. Now there's a dedicated mentor for passive investors that, I mean, you can strictly go to her. Madeline's invested in, I don't know, probably thousands of deals.
It's a crazy number.
She knows, she knows what to help you look for as a passive. She knows how to help you underwrite how to help you understand the numbers and what to look for and that type of stuff. We can't ever tell you whether a deal's good or not, but, hey, does this fit your specific goals as an investor? We can help you down that path. And then, as a aspiring lead or a deal sponsor, the mentors, you really kind of go under their wing, and they show you, this is how you work the numbers. This is how you read the numbers. This is what you understand. Through the due diligence process, we go walk all the units, run cameras down the sewer lines, all the sexy stuff that, nobody ever thinks of. We get to go do all of that. And the mentors are there with you every step of the way.
Yeah. So just like you said with the single family, do your due diligence. You help with that. Yep. And so you're going into that eyes wide open. Well, hey, we're heading to a quick break here. When we get back, I'd like to hear a little bit about that first investment, and then let's cruise through the San Antonio market. Tell us a little bit about what's going on down there, if you would.
Got questions? Call Lifestyles Unlimited at 855-497-4335. The Real Estate Investor Radio Show continues next.
So when I say be ready, number one, to get ready, you better join up Lifestyles Unlimited and learn all these things we're talking about. You're out there piddling and, internet information and your buddy's information or your dad's information. It's not going to get you the results that we're talking about. You're going to have to be educated in what we're doing.
Learn from the people that are already where you want to be. Join us for the free online workshop at lifestylesunlimitedworkshop.com.
Creating the lifestyle you've always wanted. You're hearing Lifestyles Unlimited's Real Estate Investor Radio Show.
Welcome back to the show. I'm your host, Andy Webb. I'm joined today by Geoff, one of our multifamily mentors in the Central Texas market that encompasses Austin, San Antonio, and all the way down to the border. I do want to throw my email out there. If anything has come to mind during the course of the show, you have any questions, you can send those to me at askandy@luinc.com. Now, Geoff, I'm up in the Dallas-Fort Worth market. A listener may be new to the show. I'm in Dallas-Fort Worth. I'm not invested in anything in San Antonio at the moment. I'd like to learn a little bit about that area. What's going on in DFW's been exploding lately. What's happening down in San Antonio?
San Antonio is actually kind of in a little bit of a transitionary phase right now. There's a lot of new construction that's coming into the pipeline, and just like, traditional supply and demand, when supply is high, demand kind of moderates a little bit. So what we're seeing in San Antonio a little bit is a reversion to the mean. It's been really, really hot it was really, really hot, 2020, 2021, 22. 23 cooled off a little bit. Occupancies are a little soft. Rent growth's kind of pretty flat. But, if you've got a deal that you purchased early and you can operate through right now, I mean, it's not bad. It's just, it's not gangbusters. We were seeing double-digit rent growth. Almost you couldn't keep up with the pricing. It was going so fast, and now everything's kind of slowed down, kind of moderated, and like I said, it's more of a reversion to the mean. Things are just moderating back to normal right now.
A normal market, right? Yeah. What about population-wise, business-wise? We talk about the Texas Triangle, which is Dallas, Fort Worth, Houston, San Antonio, Austin. What are we seeing in that sense down there?
Yeah, San Antonio's still growing. I want to say last census data that came out, we had a bump in the population of like 7 or 8% in San Antonio.
Okay.
The big thing about San Antonio is it's growing. It's growing outside of San Antonio even, and so San Antonio proper only picks up some of that population growth, but the west side and the far north side of San Antonio are growing like gangbusters, even outside of San Antonio's in Bexar County, but a lot of the growth is spilling over into Medina County on the west side and Comal and Kendall County on the north side. And so you don't even really pick that growth up as a as a part of the San Antonio census data, but it's insane.
If you look at the map, right? Austin, San Antonio, what do you have in the middle there? Kyle, Buda, I don't know, San Marcos, New Braunfels.
Yeah.
That stuff's all connecting. It's like connect the dots. My 7-year-old, he sits down with the connect the dot books all the time now. That's we're filling in those gaps
there used to be a break between San Antonio and New Braunfels to San Marcos, and there's just not really one. And then you got a little bit of a gap between San Marcos and Buda, but once you hit Buda, it's basically you're in South Austin already.
Yeah,
so.
It is crazy down there. So I'm curious, you mentioned North and West, and I know you're invested on the West side, your first investment.
Yep.
Tell us a little bit about that. Again, going back, that was your first one to do. You you were under the wing of the mentors, right?
So back in 2018, we actually sold our personal residence the summer of 2018, and then we were kind of downsizing, freeing up some cash to go into, when you start investing, it's addictive, right? You got to go find money everywhere. So we had built a beautiful custom home in 2010. Everything that we wanted, everything we thought we wanted at the time. And then, you start looking around and you're like, we don't really need all of this. And so my wife called me, gave her the day off from work. And one day she called and says, we're selling our house and we're downsizing. I'm like, okay, so we're doing that now. So 2018 was a crazy year. We sold a house, we're building a new one, and we bought our first lead deal apartment community. It's in a small town about an hour west of San Antonio called Hondo, Texas. And, it was a really big value add. It was a 1978 property that was stuck in 1978. The interiors, we had, no joke, had avocado appliances. We had harvest gold appliances, and that marbly blue carpet that you saw in houses like in the early 80s. And it just hadn't been touched. Nothing had been done. So, on a small little 48-unit property, we probably spent about $10,000 to $12,000 a door renovating that property start to finish. And we actually still own it today. And most everybody that's in that deal I think our total return on that deal so far is everybody's gotten 99% of their original investment back out. We still own it, and we're still cash flowing. So,
did you do a refi on that at some point?
We did. Yeah, we did a refi when rates dropped late 2020. We pulled some cash out, and it's been double-digit returns ever since. So,
man, if it's cash flowing, I have a bad habit of hanging on to my single-family houses because they're very cash flow strong. So I can understand that, and I bet you have some very, very happy investors. But that's not the only one you own in Hondo, right?
Correct. Yeah, we bought another property last year, just a mile and a half down the road. We were thinking about selling that first property and rolling that capital into a new deal. And then the opportunity arose to buy the one down the street. And, it bolted on. It's 100+ units, and it bolted on perfectly. So we decided to scrap the sale plan, and now we run them together. And one thing you learn about is economies of scale. And when you've got that many doors literally right next door to each other, gives you some economies of scale and gives you some efficiencies.
Now I'm curious, Hondo, and I saw you present at a case study. Man, I don't even know when it was. It's been a while, but you talked about that first property. And, I had to look up where is this place, and it's a little bit like you said, an hour west of San Antonio. I guess we would call that a tertiary market. I'm curious. We have investors buying in primary markets like Dallas, Fort Worth. I don't know if San Antonio is primary or secondary, but compare the two. Where, does it matter where I go? What should I be targeting, say, as an IRA or my first time lead investment?
So as a lead, or as a first time, you're a little bit, you got to be a little bit more discerning about where you buy, because sometimes the lenders are worried about how far away the property is from where you live, right? So if you're the deal sponsor, if you're the lead, if you are an IRO, sometimes the lender doesn't want you to be, an hour away from your subject property or from the property that you're looking at buying, without handing all of that off to third-party management, somebody that understands that market or has operated in that market. And so sometimes as a first time, when you don't have any experience, or, you're just cutting your teeth into the industry, you probably want to stick to something a little closer to home, maybe 30, 45-minute drive, something within, 40 miles or so. That's something that the lenders will sometimes trigger on. But outside of that, once you start getting some experience, we've got a property now that is right on the U.S.-Mexico border in Eagle Pass, Texas. It's a 2.5-hour drive, and they saw the experience that I had in the tertiary markets managing. The lender did, and they they just were like, okay, you know what you're doing, go on, have fun. And when was it? June of 22. And the broker that brought the deal, the real estate broker that brought the deal to me, I still laugh with him. He's a friend of ours. We were looking at buying another deal. We were underwriting some stuff in San Antonio around the property we had purchased there, and we were kind of wrapping up our renovation projects and kind of ready to move on to the next deal. And he came and brought this deal, and the numbers on it look good, everything, until you read the address, and the address says Eagle Pass, Texas. And I went, oh, no, I don't want to go out there. And ended up convincing him to buy me a tank of diesel, because I drive a big diesel pickup. So I just said, buy me a tank of diesel and buy me lunch, and I'll go down there and take a look at the property. And so my wife and I loaded up and drove 2.5 hours to Eagle Pass and pulled in the gates of this property and immediately fell in love. It was a beautiful property, well-maintained. When we toured the units that were vacant at the time, which there weren't many, it was 135 units, and I think they only had 1 or 2 vacant units. Very quickly identified some ways that we could do some pretty light renovations, and did a quick market survey while we were down there, and realized that there was some room for some rent growth, and occupancy was tight across all the properties that we had surveyed. And, long story short, 6 months later, we owned a property in Eagle Pass, Texas. One of the biggest questions we had is probably one that you have in your mind, and I would imagine a lot of the listeners do, hearing Eagle Pass, right? It's been in the news, and
it has. Yeah,
crazy with it, with the illegal immigration. It's got to be a third world, like a third world country down there. And quite honestly, I feel safer in Eagle Pass than I do in San Antonio sometimes. I will go down there and spend 2 or 3 days in Eagle Pass on that property and walk around in the middle of the night and not have a worry in mind. It's not what you see on the news. And,
right.
And I just, take all of that with a grain of salt. I'm not saying that there's not an issue with illegal immigration. I'm just saying it's not as bad as maybe what the doom and gloom news is trying to sell you.
Well, yeah, and you've been down there. You said you bought June of 22, so
right.
Good year and a half,
so
almost
we're coming
2.
up on 2. Yeah, coming up on 2 years down there.
Now, you said it's a pretty light lift. What sort of turnaround? What are you doing to I guess, update or upgrade give it a facelift? Well,
part of this property is built in 3 phases. So there's some of the property was built in the 70s, some of it was built in the 80s, and then there's some newer product that was built in the late 90s. The late 90s, there's not a whole lot to do. It's, just paint touch-ups, maybe swap out some floors, things like that. In the other 2 phases, phase 1 and phase 2 is what we call them, the 70s product and the 80s product. We go in and I feel like one of the staples that you've got to have in a home or an apartment in South Texas, you got to have ceiling fans. And so we go in and do a lighting package, and we add ceiling fans to the main living room and the bedrooms of the apartments, and just kind of upgrade lighting package, upgrade an appliance package. Generally, there's some flooring swap out that needs to be done, and it's more cosmetic stuff. There's no major systems functions. One of the things that we found out, we re-roofed that property. That was a nice big 3-month project, but as part of the CapEx plan, we knew that the roof was aging, and you don't mess around with roofs with insurance anymore, because they'll cancel your policy if you don't play ball with them. So we got on that and did some parking lot repairs. I mean, it was, after what we did with our first property, the lift that we had on that, everything else kind of seems like cake from there. So.
No avocado green stoves in this one, huh? No blue marble carpet.
Just almond and biscuit. But yeah,
very good.
It was a lighter lift for sure.
And it seems like people, as they progress through their, and not every time, not everybody, but through their track as a syndicator, they tend to move towards newer stuff. Maybe they've just learned the hard way. Hey, we had to deal with that 60s built with cast iron. I don't know what's happening there, but the progress seems to. Maybe you guys are more experienced, and therefore it's easier.
Well, and I think it's that, and then you've also got better relationships with better brokers that might have better product and better connections too. So I mean, it's a general evolution all the way across the board. I mean, if I had a 1978 big value add that came across my desk and the numbers worked, I'd probably bite on it. But at the same time, some of the newer stuff it's a little less management intensive too. So there's a give and take on both sides of it.
Got it. You just used a keyword. I want to pick this up. You said relationship, And it's very important in this industry to have relationships with a lot of people, build a big network. And I think part of that network is what you are now doing as a mentor. Now, you recently joined the team in Central Texas as a mentor. When did that happen? When was that?
It was just
announced?
about a year ago. It was last January, so January of 23.
Okay, very good. Why did you do that? What caught your eye there?
I got a phone call from Dell that said it's your time to go.
Okay, he said, twist. Did he buy you a tank of diesel and lunch?
No, he didn't. It was Lynn and Dell talked to me and said, hey, you've been doing some good stuff, and we think it's time to give back. So you kind of get voluntold, right? So
yeah, but it's fun. Same with the radio show. I enjoy as well. And just for the listener's sake, Dell Walmsley. He's the founder of the organization. Over 30 years ago, put this group together in Houston, and it has grown, and it is beyond Texas. It is nationwide. And Lynn Morrow is our executive VP of the company. Two big actors there. Yep. And what do you do as a mentor?
Well, now we just recently expanded, so all of the mentors we've got our home area is Central Texas, so basically Waco to the border to El Paso. So we've got a pretty big area, myself and Robert Hale in the Central Texas market, and then we expanded our scope to cover some of the national markets too, because those are the national markets are growing as well. So I've got to learn about the state of Colorado and Kansas and Missouri and Iowa and some of the Midwest area. So it works for me. I'm a data junkie. I always like learning more. And so the challenge accepted. Let's go grow. So what we do is for first-time leads or even seasoned leads, when they find a deal that they think they want to go chase, or they find a deal that they think have got some good numbers, we sit down and break the numbers down with them and look at the market surveys, look at the rent rolls, all the data, and kind of break it down and get on a real granular level, and then build it back up and see if it's something that we want to go tour, and if the lead wants to go tour it, then we go check it out and put eyes on, and then it's off to the races usually once we get to that point if they get a contract on it. So
yeah, very good. That's a mentor. Very, very key. When I was growing up as a single family investor, my mentors held my hand very tightly, and I needed that back then. And as we shift into apartments, that's very, very important as well. So we're talking about two different types, by the way. Single family mentors focus on houses, multifamily like Geoff focus on apartments.
Right.
Last question, just we got about a minute here. Is it a good time to invest in apartments, Geoff?
I think it is getting ready to be a great time. I think we're coming into a shift in the market. We're seeing it in some areas. We're seeing some deals where we've seen $1 million retrades, $1 million price reductions on deals that we were chasing, 6-8 months ago. And so I think, with interest rates, the mindset of interest rates pulling back a little bit, and some sellers kind of coming to the table going, hey, it's really is time to sell. I think we're right on the edge of time to go jump in. It's a great time to get educated, great time to learn about what you're doing as an investor, set up some goals, and then go find some deals that
take
fit
action.
those goals.
Yeah. You said it yourself. You learn where to look for capital. Sold your house. We talk about things like this at the case studies, at the 2-day financial freedom seminar. And if you want to learn more about what we do, go to lifestylesunlimited.com. If you missed any part of this show, you can catch that archived there. But there's a button there for our free workshop. That's really where you should start. It's free. It's an hour and a half. Learn about the 5 ways we make money in houses, 6 in apartments, and learn about the things that Geoff and our fellow lead investors do, how to get involved. So, Geoff, common regret amongst investors, what is it?
Didn't start soon enough.
That's right.
You get a room of people that are real estate investors, I guarantee you're going to find every one of them says, I should have started earlier.
Shoulda, coulda, yeah. I wish I had to. So, hey, I think we're heading towards the end of the show, so I'm going to go ahead and thank you very much. I appreciate all the information about San Antonio, about the tertiary markets there, Eagle Pass. Glad to hear things are going as well down there as they are for you guys. To the listener, hey, go check us out, lifestylesunlimited.com. And remember, it's not the money, it's the lifestyle. You have a good day.
The information and opinions you hear on the Lifestyles Unlimited Real Estate Investor Radio Show are those of the hosts, guests, and callers. The Lifestyles Unlimited Real Estate Investor Radio Show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.